Today, I want to talk about the secret and illegal AMC off-exchange trading that's just been discovered and proved by both Charlie and Dave Lauer. I want to explain how this has impacted AMC over the last 2 years, but also what we can do about it. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, obviously this is about the alternative display facility that you may have seen on Charlie's video. So first, let's start by explaining what the ADF actually is and what it actually does. So Biotech Moose is tweeted saying, for those who don't know what an ADF or alternative display facility actually is, see this extract from Warrior Trading. He says it's where dark pool and payment for order flow transactions are reported away from the lit market. You just can't make this stuff up. So this extract says, what is an alternative display facility, ADF? Well, the ADF is a piece of market infrastructure run by FINRA. Institutions use it to post quotes and report trades. So these illegal and secret off-exchange transactions don't actually happen in the ADF, they're just reported to the ADF. Obviously these transactions happen in the ATSs or alternative trading systems. It says it's called the alternative display facility because the ADF is an alternative to an exchange for institutions to post quotes and report trades. It's basically where institutions can post quotes and report trades that don't occur on a regular exchange or in any kind of lit market. So these off-exchange venues can be any kind of ATS or alternative trading system, such as the dark pools, such as internalized trades, or even straight up negotiated over-the-counter off-exchange transactions. So by now we know what dark pools actually are. They're exchanges, not including the New York Stock Exchange or the Nasdaq, usually run by these major banks where off-exchange transactions happen at a quoted price. But you've also got internalized trades where your broker or an affiliated party trades against you, i.e. through those payment for order flow transactions. But you've also got those straight up negotiated trades over the counter where two parties get on a literal phone and arrange a trade away from all exchanges. So not on the lit markets, but also not even in those quoted dark pools. And obviously this is where the really sketchy stuff happens, where two parties get on a phone where there's no physical record, like an email chain or a text message chain, for example, and they hash out and negotiate a trade completely off exchange for any price they like. This is obviously where those big dogs do those trades. You may think many big players do trades in the dark pools because it's away from the lit markets, but the big dogs of the big dogs do the trades over the phone where there's zero record whatsoever. So you may have already seen this video from Charlie's vids where he basically scrapes the Webull API to get tons and tons of live transactions. Now these live transactions are going through the regular lit markets, but there's also tons of transactions being reported to this FINRA alternative display facility. So this is those dark pool trades, it's those internalized trades, and it's also those completely off exchange over the counter, over the phone transactions as well. But also remember, this alternative display facility is still an SRO, which is a self-reported organization or effectively a self-reported facility. So it's still down to those hedge funds and those market makers to accurately report those trades in the alternative display facility. And obviously I say accurately because no one could surely ever imagine a hedge fund or a market maker not accurately reporting trades. Surely that's never ever happened before, right? Which obviously is complete sarcasm. Now, if you wanted to know exactly who is participating in this alternative display facility, you've got JP Morgan Securities as an active ADF participant and a bunch of inactive ADF participants being Instanet, Track Data Securities, Direct Edge, Lava Flow, Luminex, and none other than Jane Street as well. Now, obviously, if Jane Street sounds sketchy, it's because Jane Street is one of those people or one of those market makers that is likely creating synthetic shares for AMC alongside Citadel. Now, Dave Lauer has also tweeted saying he's just found this enforcement action from 2012. A subsidiary of Charles Scwab was caught creating synthetic shares or caught naked shorting and using options contracts as sham reset transactions, resulting in continuous FTDs. He said in case someone tells you it can't happen or something like that, or tries to convince you that naked shorting doesn't exist. Because this is clear enforcement action against a subsidiary of Charles Scwab, clearly performing naked shorting, using those options contracts as sham resets, and creating continuous FTDs. Now, I wonder where I've heard the words naked shorting, sham resets, and continuous FTDs since 2012 more recently. AMC and GameStop primarily. And I wonder where I've seen crazy and continuous and elevated FTDs over the last few weeks and the last couple of months. AMC again. Now it says this enforcement action or this case involves a complex short selling scheme to profit by circumventing the delivery requirements of regulation SHO. From at least October 2008 to March 2010, Option Express, a wholly owned subsidiary of the Charles Scwab Corporation, failed to satisfy its closeout obligations under Rules 204 and 204T of Regulation SHO by repeatedly engaging in a series of sham transactions, known as resets, designed to give the appearance of having purchased shares to close out of an open failure to deliver position, while in fact not doing so. The sham resets were accomplished by Options Express facilitating its customers buying shares and simultaneously selling deep in the money call options that were essentially the economic equivalent of selling shares short. So this is obviously those married and divorced puts, which give the illusion of closing out of an FTD position, but actually just end up kicking the can down the road and making the position even larger. And it says these paired reset transactions were not bona fide purchases because their purpose was to perpetuate an open short position while giving the illusion of satisfying the delivery and closeout requirements of Regulation SHO. And crazily enough, in 2010, the customers who engaged in the above described activity accounted for on average 47.9% of the daily trading volume in Sears. Now, Sears is obviously that company that went bankrupt a while ago alongside Toys R Us that Ryan Cohen has posted about before. It's crazy that the whole time the answer was staring us right in the face, as this exactly happened to Sears and Ryan Cohen had posted about it nearly 2 years ago. But so this just proves that naked short selling, sham resets and continuous FTDs do absolutely happen and still happen to this very day. And it's likely happening in these ATSs or alternative trading systems and being reported in the alternative display facility. I wonder if there's a way we can trawl through the alternative display facility and pick out and separate which trades are legit trades and which ones are clear criminal activity. No, I'm Not a Cat has tweeted this extract from an article that says in the last year, AMC Entertainment Holdings saw its revenue grow by 55%. And it says that's well above most other pre-profit companies. So on the face of it, we're really surprised to see the share price is down 73% over the last 12 months. This mainstream media outlet is basically saying that AMC as a company is growing and is growing massively. So they're for some reason surprised to see the stock price is actually down instead of being up. They've said there's clearly something unusual going on here, such as an acquisition that hasn't delivered expected profits or something else being swept under the rug. They've said what's clear is that the market is not judging the company on its revenue growth right now, and the sell-off could be unjustifiably severe. So I'm glad that the mainstream media is finally realising that there's something unusual going on here, as even they would expect the AMC stock price to be up. It's only taken them 2 years, but they're finally getting on board and realising there's something wrong with the AMC trading. And as Jan Jack has tweeted, he said the clearinghouses are having a difficult time handling massive amounts of FTDs in AMC. He said it's practically impossible for brokers to deliver any company issued AMC stock due to the fact that more than 95% of the shares outstanding have been locked in retail's accounts with share lending turned off for more than 18 months. And he said that's why Doug from Virtue and Ken Griffin from Citadel Securities can't sleep at night. And he said the liabilities that are on their balance sheets and even off balance sheet due to those unsettled synthetic assets are off the chart. The conditions for the systemic meltdown that was averted in January 2021 and in June of 2021 again with the buy button removal have dramatically worsened into a massive settlement crisis. It's now at the point when AMC is not only incurring FTDs every now and then, but AMC is now constantly incurring FTDs and is only removed from the threshold securities list under heavy manipulation. Well, heavy manipulation and likely illegal and incorrect reporting as well. But again, it is good to see these hedge funds are struggling more and more now than they were even 2 years ago. The situation has got progressively and significantly worse for them, and their liabilities are even larger. They've dug an even larger hole and doubled down and tripled down on their short positions. They could have likely escaped in January 2021 by closing out of their short positions, and it would have been only 1 or 2 hedge funds and 1 or 2 market makers going bankrupt. But now they've dragged it out for an extra 2 years, those liabilities have mounted, and when AMC and GameStop do squeeze, it's likely to destroy the financial system, or at least destroy the stock market, or at least cause a significant stock market crash. Now, Walter Bloomberg has tweeted saying the BlackRock vice chairman has said that I don't see a soft landing happening because it's definitely going to be a hard landing. And as Align Capital tweeted, he said, it's just BlackRock, it's only the largest asset manager in the entire world. Please, nobody panic. So it's now even got to the point where BlackRock is absolutely calling the Fed's bluff and is saying, guys, it's not going to be a soft landing. We are absolutely guaranteed a tough recession. As I said, this tough recession has been made worse over the last 2 years by these hedge funds and market makers not closing out of their short positions back in January of 2021. They underestimated the retail investors, they underestimated the apes, and they were 100% certain that every single retail investor would have sold their AMC shares after 2 years. And they were 100% confident that AMC would absolutely go bankrupt in this time with zero support from the apes. Now, obviously, that is absolutely not what has happened. Their liabilities have doubled and tripled, but we are still holding our shares and still obviously not going to sell. And therefore, at some point, these large hedge funds and these market makers will end up failing to meet their margin requirements and will be forced into a liquidation. At which point it will push the stock market down significantly further, causing this much harder recession. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.